friends, this is Raj here from VizData. Today I'm going to share a trading system which I follow for my intraday trading. Let's get straight into it. The first thing is setup, right? What is a setup? What we look for when we say, yeah, this setup looks good for us to take a trade. So there are several factors we look for. So primarily the price, right? So do we use in any indicators? Yes, but we don't use any lagging indicators. We use only leading indicators. So when we talk about indicators, there are two types of indicators. One is lagging and then leading. Lagging means the indicator follows the price movement, and based on that it applies some mathematical calculation and then shows some graphs, right? That is lagging indicator. Example, MACD, RSI, all those things are lagging indicators which follows the price. But leading indicators are, it's not going to follow the price. It just plots the picture before it reaches that point, right? That is the leading indicator. The examples are ATRs, price, volume are all fact-based leading indicators, right? So price, if the price is going up, that's a leading indicator for us. Yes, the market, in the market we are seeing a lot of buyers. That's an indication, right? And so we are going to, if the volume is growing high, that's an indication that people are coming into bids and asks, right? So that's a leading indicator because it shows exact statistics, not what is going to come in future, what is happening right now, right? So we use, in my trading, I use always these two types of indications. One, price and volume. Anything which we can build around these two factors is what I use as an indication or a reference, I would call, for taking my trades. So how? That's what I'm going to explain. So the first thing is the key price levels, okay? So what is the key price levels the markets are at, right? In a daily chart, just key levels at which the markets get rejected, key levels the markets get support, all that. In 1 hour chart, 15 minutes charts, that's very helpful for us to understand what level the market got heavily rejected on different time frames, okay, which could be a place where market can react again, high probability again, not just it must react, it not necessarily it must react, but it's a high probability that it can react at that same level again, right? So we need to understand the key levels, price levels, one, right? The other way of understanding the key price level is using a volume profile. So when you put a volume profile on our chart, it shows at a specific price point how much of volume is being conducted, and also what is the area, what is the area in which the most of the volume is conducted, like 70%, whatever percentage we set, we can see, okay, what is the area in which the 70% of today's volume is being conducted, which is very, very critical, out of which there is a concept called point of control, which is the midpoint at which the most of the volume is being conducted, and then a high value area, and then low value area. Okay, so there are two lines which I will show you in the graph. Okay, so those three lines are very, very important, because when markets does not cross these levels between the high value area and the low value area, it will most of the time go inside this level if it does not go beyond these levels. But if it goes beyond these levels, then there is a good chance for us to see a trending market and we can play accordingly, right? So that is the price level, the importance of price level. Second thing is sweet spot, okay? So at what, see, there are a lot of times we can take a trade but we are playing with index, and it is going in a tick, and every tick costs much for us. So we need to take a trade at a place where we could afford less ticks of stop, right? So we need to wait for markets. See, even in a bullish market, if you want to take a bullish trade, we don't want to take that trade when 3 bull candles already there, right? When 3 bull candles, big bull candles are already there, yes, it is a bullish market, but we don't want to take at that right point. We wanted to wait for a point where it little bit retrace based on the price action, and then take a trade at a sweet spot where even if we lose the trade, we don't lose much. How much we can lose, it's totally up to us how much we can lose. Everybody will have a different appetite to lose, how many ticks. But we need to identify that appetite and set that stop and find a sweet spot for us to take a trade, so that even if we lose the trade, we are good to go. We are not too worried about it, right? Though we are bullish in the market. So that's what I'm saying. Even though we are bullish or bearish, always look for the pullback and then enter a trade in that direction. So that is the sweet spot. The directional bias, okay? So the directional bias is, first set your bias, which direction you want to go for, right? Bet for. So how do we do that? Okay, whether it could be either up or down. It's based on purely our VizData Scalper. VDS stands for VizData Scalper. The VizData Scalper will always show you a level with green or red, which shows whether the market is up or down. Okay, so that can be used as a method for understanding the direction. Sweet spot also can be recognized using the VizData Scalper levels, VDS levels. The VDS levels always is a good support or resistance at any given point in time for us to identify the sweet spots and the reversals, right? So VizData Scalper levels are very, very important. Okay. Then the fourth thing is the volume, which we already talked about. Okay. We wanted to see volumes from all sides, right? Meaning at a particular candle, how much of volume is being traded, and also at a particular price level, how much of volume is traded, right? And that is why the volume profile is very, very important. That will give us, like, horizontally at a price level, what volume, what price is traded, how much volume, right? And if you put a vertical volume, like every bar level, that's our normal volume, which will say, okay, at this particular bar, how much volume has been traded. Okay, very, very simple. But we need to understand that volume. So we also use a volume based volume weighted average price indicator. So that's also an indication of combination of volume plus price and stuff like that. So VWAP is another primary indicator we use to understand where the market price is at today, right? Is it at the center of the VWAP, or it is going beyond the VWAP, or closer to the VWAP, or 1 standard deviation, 2 standard deviation? So VWAP is another volume indicator, volume price based indicator we use. And then the last is stop loss and the profit targets, right? So how much we can lose, that we have to already decide. But how much we can take as part of every winning trade is also very important. If we are setting our stop loss as 10 ticks, we can lose. That's what our appetite is. Then we have to make sure at least we take 20 to 30 to 40 ticks for a winning trade, right? That way we can make that system more effective and make very good trades, right? So this is what we call it as a setup, right? So so these are all the factors which consist of forming a setup, okay? Now let's get into the next thing. So what do we use for that? So VizData Scalper. What is VizData Scalper, right? We talked about it a little bit in the first slide. So what is VizData? VizData Scalper is not an indicator. It's not something crazy or like, magic and all. It's just a simple tool, you know, built using volume and profile based, right? Mathematical calculations, purely mathematical calculations, right? So what it provides us, all the values which VizData Scalper provides are reference only for us to understand what is the right place for us to take an entry, exit an entry. What is our sweet spot? What is the probability of the support and resistance level reversals, right? What is the probability of reversals at the support and resistance? So those are all the things which we may need to understand based on those indicators, right? So based on the scalper indicator. So the scalper shows some level, some measures, some values, some distance, all that. All of that can be used to find where we are at the given point in time in terms of price, action, volume, right? And what are all the primary things the scalper use? First is the price range, the true range of the price action bars. Based on that, we calculate the scalper level, VDS levels, right? And then the second one is the volume weighted average price with 1 standard deviation, 2 standard deviation, 3 standard deviation, and also the VWAP at a 5-minute and 15-minute VWAPs, very important. And similarly, moving average, weighted moving average for 15 minutes, for the current 1 minute, 15 minute, and 5 minute. And then the last one is the volume profile, in which we look for point of control and value area high and value area low, right? These are all the simple metrics. We don't need to get carried away with, so many things we need to look for. No. At a given point in time, where the price is, based on that, what is closer to that? Based on that, what is our directional bias? Based on that, what is our stop loss and a profit target? That's all we are going to decide, right? So we are not going to look into everything at a given point in time, but wherever the price is trading at that point, what is that point and what is surrounding that point is what we are going to look for in that indicator, right? So that's what it is. So what signals, again, it is again only for reference, not just actual signals. And again, I'm not a financial advisor or anything like that. I used this method, and I am just sharing the methods which I used in my sharing in my trading methodology, right? So when I say signal, it is a probability again, okay? There is a signal for buy to open trade, which means there is a high probability that you can lose less, but when you win, you can win more, right? What is that type of places? So it's highlighting some places where, there seems to be a sweet spot for you to take a trade, right? So what are those setups, right? What that setup will look like, okay? So when you want to buy, when you are biased towards upward direction, when you want to buy the feature, right? So you need to look for a green candle with green candle and an yellow color candles alternate, right? So you have to wait for the green candle. So yellow color candles are always the pullback mode, right? When you see an yellow color candle, it means a pullback mode. We have to wait for that pullback to complete, and then again look for the start of a new trend. That's the next green candle, okay? That's what the first step is. The second step is test and reject above the moving average, okay? If it is a good trending situation, it should get tested at some point, pullback, tested at some point, and then rejected. That means the trend is still on, okay? I just said moving average, but it could be moving average, it could be our VizData Scalper level, like many other places. So primarily we have to look for moving average as support, or VDS level as a support. So it should get support, rejected, test, rejected, and then start a new trend, and that is the second indication. Stop loss. When it gets rejected at moving average, then our stop loss is going to be the yellow candle which got rejected at the low of the yellow candle which got rejected at the moving average, right? But at the same time, when it gets rejected at VDS level, then VDS, the candle at which it got rejected, still the low of the candle is our stop loss, right? And then we enter the next green candle, right? So the stop loss is very, very important. So as close as possible to VDS, it is good for us because the loss we are going to take is very less. If you want to take it before that, then yes, the loss could be a little bit more high, but still, if we are able to afford, we can take it upfront, right? So these three things are primary. And when should we take this trade is also very important, right? What level we need to take this trade? Will this work at every level? Maybe or may not be. Then what is the high probability level in which this setup could work? At key price levels, okay? What are key price levels? The key price levels are nothing but the volume profiles, value area high, value area low, and then the POC, point of control, or previous day close, or previous day high. Those are all the key levels we are talking about, right? So those levels, if we have marked down on the chart, then that could be our levels to look for a directional bias and a perfect trade setup, okay? And then what could be our targets or like, to take profit is if it is a upward trend, if there are volumes conducted above the level which we are going to take and there are low value nodes, that means low volume traded, obviously the price will go to that low value node and then fill in some volumes, okay? So that could be a potential target for us, right? So this is the kind of a 5-step process to identify a signal. And again, it's free flow format. It is nothing written or anything like that. It's a free flow format. We have to put our thoughts into every time when we take a trade. We have to put our thoughts to convince ourselves, okay, is this a trade for me or not? If we are taking a trade, we need to answer why we need to take this trade. What is that signal? What is that confirmation we got to take that trade? Okay, so that is the steps we need to go through mentally every time when we take a trade. Same pattern, sell to open. If you are downward biased, you need to see a red candle followed by a yellow candle. Yellow is always a pullback in either directions, okay? And then test and rejected below the moving average, okay? The moving average should be falling in this case. In the first case, the moving average is rising. In the second case, sell to open, the moving average should be falling. And the stop loss is high of the trigger candle. It's not low, sorry for that. It's high of the trigger candle, right? Stop loss is high of the trigger candle. And then, again, price levels are must. Where should we take that trade? At a key price levels where it gets rejected. And then higher value nodes as a resistance, okay? High value node as a resistance or low value node as a profit taking thing. On the upward side, high value node as a resistance, and the lower side for taking the profit, look for low value nodes. Okay, so this is all, again, nothing to worry. Okay, all are just a reference for us to decide when to take a trade. Okay, very, very simple. Just stop it, pause it, go through it one more time. So think through it, why we are taking this, why we are doing this, why we are doing this. That's it, very simple, right? One is directional bias. The first slide we talked about all the 5 pointers, right? The first one talks about directional bias, green or red. The second bullet talks about the confirmation, whether it is getting rejected, whether it is respecting a particular given level, that could be our confirmation. And then third one is, okay, how much of loss we are going to afford if we lose this trade. We, at any point in time after taking a trade, we don't want to worry, oh, if we lose this trade, what will happen? Nothing will happen. If we are losing 10 times with 10 points, 10 ticks, and if we win 2 trades with 40 ticks, still not a bad day for us. 20 ticks losing trade, right? So that's why I'm saying losing is not a problem. We should never worry about losing a trade, but we should more often take a trade. But losing is not a problem if we take a trade at a high probability chances, with a high probability chances, right? So that is the only thing. Okay. So next, finally, what do we look for? Okay. We look for one direction, the key price levels, and what is our loss we can afford, what is the profit we can take out of that trade. That is the trade setup we are looking for, and wait for the right setup. Always trades keep happening. Continuously trades are happening, but wait for the right setup is a very, very must to key. You cannot get every trade. You cannot get an opportunity to enter every trade in every day, right? In a given day, you cannot enter every trade until otherwise a nice setup opportunity provides us an opportunity to enter a trade. If it doesn't, we should not worry. Let it go. Wait for the setup, which is perfect for us, and then convincing for us, and then enter a trade. Okay. That setup, goal of that setup is to minimum loss, high probability winning, and a high profit for us, right? Minimum 1:2 profit, maximum it could go anywhere, but try for 1:3 as always, right? So that's all, guys. So that is the system we wanted to follow consciously before taking a trade. I'll show you some of the indicators, the scalpers now. Let's talk about that scalper, and then I'll explain what I have in this chart, okay? So this is the scalper here. So VDS scalper. So, and then I'll show you the volume profile also, right? So what is that volume profile, how it looks like. Okay, so here you go. So don't get crazy about this. If I shrink the chart, it will be looking like this only, but generally we will be like not showing it like this. Okay, so look at this. Okay, so now let me just hide this one. Okay, volume profile alone. Okay, this is just the volume profile chart, guys. Okay, so I'll hide everything else out of this chart, just the volume profile alone. Okay, if you look at this, this is what is called volume profile for that whole session of the chart trading day. Okay, so what it does is it shows us, okay, the maximum amount of volume is conducted at this level. Okay, so that is why our volume VPOC is at this level. This is the VPOC. The blue line is the VPOC. I'll change it to a different line, probably POC, right? Volume point of contact is this white line, so that you can see it clearly. Okay, that means this is the point for that given day. Most of the volume is conducted during this whole session of that day. And then this is the value area low, the red line, and the value area high is the green line. So these three lines helps us to identify where the price is currently going on and what type of trade we should take. Most of the time, if it is closer to any of these levels, it could easily get rejected or break out, whatever it is. When it happens, it gives us a great opportunity. Example here. So I can now zoom in and show you some of the trades here, right? So look at this one. Okay, so at this point, okay, it pushed back here. So this is the trade I took. You can see here I took a trade at this point, exact point. So you see my executions also here. I'll just show you in a minute. Okay, so here Look at this one. Beautiful trade, easy trade, beautiful trade. I took it for a reason, okay? That is very important, okay? So I took this trade for a reason. So here, look at this one, okay? So this is the white line is the point of control, and the red line is our lower area, low area, value area low. Sorry, I keep messing up with that term. Value area low. So what happened was here the price got rejected at this point, and then it just pushed back, and then I said, okay, I will take this trade because what, you know what, I want to put the stop loss at the low, the swing high here, okay? Swing high is my stop. So I took a trade here because my stop is very, very close, like 4-point stop. That means 16-point stop. So see what happened. Just next candle just brought it down. I just closed it at the, I think at the somewhere here before the candle ends, right? So for me, 77 to 300, it is close to 27 points. I risked 16 points. I took close to 23 points. So that is the risk reward, right? So it is not 1:2, but I could have waited for some more time, but I just took it, right? So that's this volume. That is the level I was talking about, right? So here many times it happened. Here also it just went and just came back. So how many times it happened? See, that's what I was talking about. But when I take this trade, there is a clear reason for me, because my stop was visible to me clearly. That's why I took this trade. But here, if I need to take this trade, my stop could be here, which is a little bit high. So those are all the things, right? It is very, very subjective. There is nothing right or wrong in any system, right? If we are able to afford the loss, and if there is a probability that it will not hit that loss, then that's the trade for us. So now, when it break this level, I want this to get support here before it just go up. But it came here, it didn't get support, it just broke below, and then it tried to came back below. I will not take any trade here because there is nothing clear pattern here, okay? But here we will take a trade. But again, I am only showing volume profile. I kind of hide that VDS. When I combine VDS with the volume profile, you will see the value, right? If I add this, now you can see what is the direction I am going, okay? So now all these trades, right? I would not have taken all these trades because this is green and yellow, means upward direction. I will not take a downward bet when this is green and yellow. So all these trades are invalid for me, right? I would be betting for upward, not downward. And here I took this trade because you see here, this is red and yellow. So this is red and yellow, guys. So I took this trade as a downward bet, and I won that trade. But all these other things are green and yellow candles. So I will not bet for a downward trend. So ideally I should be taking an upward trend trade, okay? But I didn't take any trade because the values are too high and it is in the middle of the moving average. I didn't take this trade, okay? So again, this trade, did I take this trade? No, I didn't take this trade also. But should I take this trade? Yeah, I could have taken this trade, but the risk is too high for me. You know, you see here the distance between this and this point is 84 to 308. 84 to 308 is like 32 points almost, right? 24 points. So it's almost 24 points. I don't want to risk a 24 points here. I want this to pull back and then take a trade, but it never pulled back. So all I'm saying is you cannot catch every bit of the trade. This trade you might have missed it, but that's okay. All right, you will get another opportunity with less risk. Where is that? Okay, so now you see here it went up to here and then again pulled back, and then pulled back up to two levels. It will pull back, as I keep saying. Okay, one is the moving average, that is the white line. I want this market to pull back to moving average and then take a trade at the green candle next to that yellow candle above the moving average. Yeah, that is right at this point. What is the stop? So let me zoom it here. Yeah, here. Look at this. So I want, as I said, we want to look for a sweet spot. So it comes closer to this and then get resistance at this, get supported at this moving average, and then next new green candle. Yes, is that a good entry? Yes, absolutely yes. Okay, take this trade. Okay, there is a signal also, again reference signal. Okay, you don't need to take that as a confirmed or anything like that, just a reference. So it's saying, oh, it's a sweet spot right there. Okay, so yeah, go ahead and take this trade. What is our low? If you want to play conservatively, then our low is low of the trigger candle, as we always say, this level. But ideal stop loss is below, one tick below our VDS level, one tick below one VDS level. If you keep an ideal stop, then if you lose that trade, you are losing much more than a conservative stop. That is the only difference. Okay, so that is why I always wait. Is this something wrong in taking this trade? Absolutely no. If you put a stop here, the problem is it got stopped out. Okay, here, that is the only problem. You will see more often your trade getting stopped out, but your stop will be obviously low, right? So okay, assume that you took this trade, you put a stop lower to this trigger candle and then it got stopped out, no problem. Then wait for another trade. So now it is coming back, tested with the VDS level, rejected, and then forming a new green candle. So assume that you enter here. What is our stop loss? Our stop loss is the trigger candle's low, which is nothing but the VDS level. So we keep now this time the stop loss here. That trade is a winning trade for us. It never stopped out, it just went and then came back and then just went. So 3-4 times. So if you see this stop loss, if you take this trade here, 53, 54, and then our 43 to 54 is 11 points, right? It's a 11 point stop, but that means 1:2 means you have to take 22 or 33, right? So if we take a 50, if we take, assume you enter at 54, 54 plus 33 is 87. Yeah, 87 easily, right? It went up to 90, easily 87. So 3 times, 1:3. This trade is a 1:3 winning trade, right? So that's how it works, right? So that is the key of this strategy. Okay, you took this trade off here. Now what? Wait for the pullback up until what? Until this moving average, or the best places until this VDS level. The good thing is VDS levels and moving average are close to each other. So this is a perfect sweet spot, and there you go, another signal at this green candle. Can I take it? Absolutely yes. With a low of this trigger candle, 67 or 68 even. If you put 68 as the stop loss, enter at 74. 74, 68 is 6 point stop. Okay, so you are looking somewhere to 18 points. Okay, that's all you are looking at this trade. Definitely you will get it, you get more. But again, one thing, right? So you don't need to take your profit if you don't need to, right? If the markets are really bullish, you can just follow this VDS levels as a stop loss for you, right? So if you would have taken this trade and followed this VDS level as a stop loss, if you taken this trade at 76, you see where it is getting stopped out. Okay, it is keep on going. You are moving all your stop to this VDS levels, and then here it's a big consolidation. I would say if you see a big consolidation like this, get out of the trade, okay? But yeah, just say somewhere here at the lows of here, or you can see the value area high. This is the value area high, okay? If it hits the value area high, certainly we can take off the trade, call it a day, right? 445, okay, this is the 445, and where we took the trade is around 375 to 445, guys. That's the trade, call it a day, end of the day, okay? 375 to 445, how many points is that, right? It's close to 70 points. 70-point trade, end of the day, right? That's it for the day, right? So do you want to take more trade? Yeah, absolutely you can, but look at where the market is. Market is outside the value area high. So what we can look for, either it pulls back into the value area, gets rejected, rotate it again to the VPOC, right? The point of control. Look at the weighted VWAP, moving average, right? It's way higher than that, but doesn't matter. It is at a standard deviation. So what is there in this chart? Okay, you see here that blue dotted line is our VWAP, and then one standard deviation is marked as this green line here, that line, and all are marked here, right? The VDS U1 is the upper one standard deviation, U2, U3, all that are there, right? So right now the market's entered into U3 zone and still continued. It tried to enter into the value area. It was failed. It failed, and then start continuing this journey. So where is our next opportunity? Okay, yeah, we know now the value, it's not within the value area. That means there is aggressive buyers in the market. So we can take a trade next to our good opportunity right here, right? And then ride the trade until it is going to end, right? Keep doing it until it fails, right? So that's how it works, right? So again, all these are not indicators, all these are systems, tools to understand what is the price level, where we can enter, where we can exit, and stuff like that, irrespective of wherever the market is going, right? That's what we are trying to do here, okay? So look at this big red trade. Is it possible for us to take this trade? No way, right? Absolutely, there is no sweet spot for us to take this trade. So what should we do? Just sit back and relax. Don't do anything, okay? I'm telling you guys, we don't necessarily need to take every trade of the day. If we are able to take one trade with our best appetite and take a good profit and a high probability, that's our trade for the day. That's good enough, okay? It is better to take 2 winning trades rather than taking 10 losing trades and a 1 winning trade, okay? So it's better to take just 2 winning trades at the right point. That's where the goal is. But one thing is, we don't want to worry about losing trades also, right? So whenever you take a trade, take the trade with the confidence and don't worry about losing the trade, because even if we lose, we are not losing much on that trade, right? So that's it, guys. This is our system. This is the tool. This is our VizData Scalper. I can share this link for this Scalper tool. It is again not an indicator, just a tool for us to understand where the price action is happening and what level we are at, what to look for, where to enter, where to exit, and things like that. Very, very simple tool, and all we need to do is use this tool, follow the system, right? If you fail to follow the system correctly, not this tool, none of the tool will work for anyone, right? None of them will work, okay? The tools are meant to use in a specific way with a proper system. If we don't use that, then it's very tricky for us to get the benefit, real benefit of any tool, okay? So this is one such simple tool, and make use of this tool in a systematic way, whichever way it works for you, right? The way it works for me, I explained it right now. Okay, this is the way it works for me. And one more thing I forgot to tell is this values here. This is the sweet spot areas, which is, see, whenever market is coming close here, whenever, see, this time you can see it is slowly moving. This is the off peak hour, the markets are slowly moving, but during market hours, the regular session hours, the markets will be very fast moving market. And I don't want to calculate what is the distance, put the mouse cursor here, what is the distance here, what is the distance here, how much my risk is there. No, I don't want to calculate. And that's why I just put this values here right away. So what is the current market true range, average true range, and what is the VDS and the closing price difference, right? This is not the value itself, this is the difference. How close the price is trading to the VDS. That's what it is telling, $2.75, which is very less risk for me. Oh, okay, I can take that trade. Risking 2.75 points, not ticks. It is point, right? So this, what is this means? So this is the VDS and the moving average distance. How close the VDS and moving average are, right? So this VDS is these levels, and the moving average is the white line. So how close these two are, okay? I want to know that. That is a very important thing for me. If these two things are very close and it is forming a resistance or support, that's a good, perfect trading setup for me, right? If this is 0 or close to 0, and there is a trade setup for me, I would go for it, just go for it, because there are two levels of support at the same point in time, which is a good strength for me, right? And this is the moving average, the distance between the current price and the moving average. How close is the market price, trading price, to the moving average, right? So that is what this one is saying. This one is how close this price is from the previous high or previous low. This will tell you previous high in case of downward market. This will tell you the previous low in case of the upward market automatically, right? So how close is this, so that I can put my stop right there, right? So this, all these values are meant for a reference purpose, so that we understand immediately what is our risk in the market if I enter this trade right now, and where can I put my stop? Can I afford this stop, right? So those kind of statistics, right? So that's all it is used for, okay? And that's all about it, right? So I talked about this VizData Scalper. So it consists of 4 items. I'll just quickly summarize it. The first one is the VWAP. As you see here, the blue line, the green line, the zones, as 3 zones. That's first standard deviation, second standard deviation, third standard deviation. This is the VWAP bands. And then the second important thing is the moving average. The weighted moving average is the white line, the white big line going here, right, following the price. This white line, that is the weighted moving average, 10 period weighted moving average. And then VizData Scalper level is the green line, which is going behind the price here, the green line or the red line when it is bearish, right? The green line and the red line. And the last thing is the 15 minutes and 5 minutes moving average. As you see here, there is a white line here and here. Those are all the 15 and 5 minutes moving average. Okay, sometimes we use that as a reference price. And then finally, this table here shows the distance of the current trading price from all these different key levels, right? Key levels. And then the price volume profile, right? What is our volume point of contact, value area high, value area low. Okay, that's all we use. But we don't use everything at a given point in time, as I explained. Wherever the price is close to, right, at that point, look for the price reaction, look for the support levels, look for which level the price is respecting, right? The price is acting on which level. Based on that, we can decide which trade we can take or which trade we don't want to take, right? That's all, guys. That's all. Very, very simple. So again, enjoy using this scalper and trade safely. I'm not in any form or shape, I'm not a financial advisor. I'm just sharing my experience on how to use this indicator and how to make use of this tool on top of a system, right? That's the system I follow, and you can follow the same system and get benefit out of it. Okay, guys, thank you so much. Happy trading and have a good day, guys. Thank you.